We have an account update on this 250K account that I started in about February of 2025. It is now July 17th, 2025. Sorry, 15th. 15th. Okay. So we are looking at this account right now. We are obviously up on the account overall. Its value is now at 275,000. Any income that I am getting into this account, I am using to grow this account. So I'm not making any withdrawals to fund like a lifestyle or anything else. I am simply reinvesting what I make in the market and putting it back into the market to grow this account to $1 million. Don't know how long that will take. But it'll be less than 10 years, I would say. Okay. So, the first thing I want to call out here is that I am using 57K in margin right now. So the total market value of the overall portfolio, if I were to pay off that margin, which I'm not going to, right now is 332,000. The other thing that I want to make you aware of is it shows like a total gain or loss of $9,735. I don't really know what this means when Schwab does it. It doesn't make any sense to me. Maybe someday somebody can explain it to me. But clearly, I'm not just up $9,735 because I only invested 250K to begin with. So we are really up 25K. So I don't know what this gain or loss means. It's probably taking into account all of the options, plus and minuses that you see here, right, as tallied against that, like if I were to sell out right now, but I'm not going to do that. So this number, just to let you know, it's kind of irrelevant in many ways because the other thing that it's not tracking for me is how much money I'm making in premium, because how much money I'm making in options premium is going to affect my tax bill. That is how the IRS determines how much money you've made in a year. Is actually, Schwab is gonna give me at the end of the year a 1099 statement, and it's gonna say how much money I made in premium and cap gains and dividends, okay? And that is how I calculate how much money I have made with options in a year, because that's how the IRS does it, okay? And I figure if anyone has the best rules for this, it's gotta be the IRS. So we're gonna go into looking at the trades for the month and seeing where we are on how much premium income we have taken in, because that's gonna be different than what you're seeing here. Okay, so let's go down and just look at all the trades that we have open right now, and I can kind of highlight for you what those are. I have 500 shares of Apple. You'll notice that I only have one covered call out on those. There's a reason for that. I am saving these shares to make earnings plays on them. Okay, and earnings is coming up in 2 weeks, 3 weeks, something like that. It comes up the first week of August for Apple. So I'm just saving those shares right now and allowing Apple to kind of do its thing. I also have some Leaps contracts here that I use to sell calls against. I'm also saving those for earnings to make an earnings play there. Amazon I've got 360 shares, and I have a lot of calls sold against Amazon. I also have Leaps on Amazon that I sell calls against. And then I also have some put spreads, diagonals put spreads here, and just some cash secured puts sold as well. I'm thinking I won't really ever have to take on these shares. I keep rolling them out into like a October / I will roll them out into a December timeframe. And I'm just going to try to make money off of not ever having to acquire more shares in this unless I feel like I want to. ASTS has been like a really amazing stock to trade. It's very affordable. It's at a high today, a higher point. It's at $51 per share, but a lot of times it's like $42 a share, 45, something like that. So I do a lot of credit spreads on this. I do put credit spreads on down days, and I do call credit spreads on up days. And this has just been an amazing income stream for me. Like, I'm thrilled with how this is working. I also have Leaps, and this stock has rocketed off. So my Leaps are like so deep in the money right now. I mean, I have a $4,000 profit on 2 of them. Couldn't be happier with the way that this is going. And I keep adding Leaps when I see down days. I buy more Leaps on ASTS and run more diagonals. Costco is just going through some things right now. I feel like what's happening with Costco is it's a consolidation year. We'll see. That could change as the earnings come up because typically what happens for Costco is they have a run up to earnings and then they soar after earnings. So we'll have to see, but I'm not making this into a diagonal right now because Costco does have like this tendency to soar all of the sudden. And when it soars by like $60 or $40 in like 2-3 days. And so rollouts can get very challenging. So when the stock price rolls back a lot, and 964 is rolled back a lot for Costco, I don't sell calls. I would be looking for something like at least a 990 price, and then I would sell something like a 1040 call on it. Okay. So that's what I'm looking for in order to start activating that leaps. And then Ionic, very similar story to ASTS. I've got 800 shares that I've got covered calls on. I have some put spreads. I have call spreads. Like I'm loving the way that this is going. I also haven't traded any in this account this morning yet. So some of these things I might modify when I'm done with this video, and add that to my July timeline, in the totals that I do later today, because I've got to like calculate where I'm at today with this. And then Palantir, I started trading in this account recently. I have some call credit spreads that are way out of the money. So this is a typical bear call spread that I have up here right now with the 185 that I bought and the 165 strike that I sold. This has been just a great play on this. And then I have a diagonal spread going as well. All right. And then Walmart. So I'm slowly sort of like just working with Walmart. And I say slowly just because Walmart is slow. It's just a slow moving stock. It's also a great stock. It keeps a lot of its value. So it offers more stability than some of the other stocks like that I have in this portfolio. I've had as many as 1,000 or 700 shares of this at various points in time, but they are being called away at the 97 strike. I bought the shares at 97, so that's why I'm allowing them to be called away at 97, and I just kind of have collected a really good chunk of change off of covered calls on the shares that I owned for months and months and months. So this has been really a nice trade. It's lower earning than the others. It's really not high premium, but again, it offers some stability for the portfolio. So we're going to go over to the next page and I can kind of show you the action per stock that I have been up to in the last month. Here are last month's trades. I'm going to go back 15 days here because I don't want to go back too far in time, but here are the last 15 days of trades for ASTS. I just put up this call spread just now. So that has made, that's going to make something like $400. I'll probably end up closing this out if ASTS doesn't get up to the 57 strike. And that's the goal here. And then I also sold some diagonals on this because why not? It's at an all-time high. So I took in $670 in premium this morning. So between these two trades, it's like $1,000. Nice. And then, oh, I did this one too. I sold another covered call. So this is 1,159 so far this morning. And then I've closed out some puts. All right. And then I did roll some calls out here. Okay. And then sold some covered calls here. And then I bought some shares here. And then I've had some options expire last weekend. We can just kind of go through here really quick. I don't think I'm going to go over everything, what it is, but a lot of times you're just seeing me sell out certain legs of it. The other thing too is that we sold a bunch of shares. We sold 300 shares at the 39 strike price, 100 shares and 42 because I sold covered calls for those amounts. So one thing you're going to notice about me is I don't get FOMO when the stock takes off and blows past my strike price. That is just a symptom of having great stock picks. And I love having great stock picks because having great stock picks is way better than having bad stock picks. So this is not a problem for me. I can see the trajectory of this stock. I like what it's doing. And I'm just going to keep trading until I sniff something is wrong in paradise. And I don't see that being a problem at all right now. So we started out sort of the month with things being assigned. and then just more trades on this stock. So that kind of sums up that one. The next stock we're going to look at is Apple. So I love Apple, but it can kind of like get stuck for a while. And right now it's kind of stuck for a while. And then when it rockets off, it's great. Okay. But you can wait a long time for it to do that. It's sort of a little bit stubborn, but it still is one of the best stocks on the market. And again, it's like one of those portfolio like stabilizing type stocks. It pays a dividend. It's great. It's wonderful to trade. I've been buying more shares here and there. You'll see through the month, but I've been trading very lightly on this because I would like to see a pop in the stock during the month of earnings. And Apple has their earnings like the first week of August. So July is really their pre-earnings month. So I like the stock. I like to leave a lot of my shares alone during that month going into earnings and then make like a lot of action towards the earnings date. So, you'll probably see that in the next video as to what I did there. Okay, so that's a summary of Apple. Again, not like a whole lot going on there. I did sell one of the leaps that I had for a little bit of a profit here too. I think like a $500 profit. So that was nice. Okay, I'm accumulating more Amazon shares as I move along here. And Amazon, again, is in its earnings month. So I tend to trade these lightly in the beginning of the month because I want the stock price to rise naturally. In general, my position on Amazon has been that I have bought calls for I bought shares for the 220 strike price because I got assigned on puts in April. Okay. And I have calls sold for less than the 220 strike price. If you've noticed in my log of all my options that I have open in the Schwab listing there. And the reason I've done this, sold lower, is because I've made a significant amount of premium in this account. And there will be a tax bill that comes due for this. Okay. And if I can create a loss, that will help my tax bill at the end of the year. So that seems like a little bit counterintuitive, but being that we were underwater so long on this account with that whole tariff fiasco that happened in April, I did want to sort of create like a little bit of a tax harvesting loss for the end of the year. So that's kind of what you're going to see going on with Amazon as some of these calls that I sold get sold away. I think that's starting to happen in August if the share price stays up. And I'm assuming it will not go down to one of the lowest calls that I sold, I think was 195. Then it starts being like 200 and 210. Okay. So right now I'm looking at a bunch of shares being called and I'm running diagonal spreads on this stock. And I'm really liking that. So you see, I haven't done a whole lot here with Amazon. It's just been hanging out, which is totally fine with me. Again, I'm going to make a lot of plays with earnings on this one. Okay. Ionic has like a lot of activity on it. Lots of spreads here. So this is a put credit spread. Ionic has been down in the last few days. So as soon as I see that, I jump on and put up some put credit spreads. I just know the range that the stock tends to trade in, and it's in a down pattern. Not down pattern, it's in a downward place right now. And I'm waiting for a pop, and then I will close these puts out. I bought more shares of Ionic because during that last big run-up that we got, that was several months ago, I sold calls, and the stock price went past my calls in overnight trading. So I wasn't able to buy shares in time to sort of cover those naked calls, you could call them. But I kind of knew that it's very rare for a stock to run up and then not come down. So I wasn't too worried about it. And it turns out my plan worked and I was able to buy shares for under the amount of the calls that I sold. So these are purchases to cover off on those calls I sold. Here we go into some more stuff. These are just rollouts. A lot of times with my spreads, I can sell one part of the spread and then keep another part of it. The other problem with, so that's what this 1366 is right here, buying more shares here, some options expiring. One of the problems with trading a stock like Ionic or ASTS, that's like a stock that's not an institutional favorite yet and doesn't have a lot of volume in it, is that when you're trying to ladder out of spreads or sell um, far out of the money options on, there's a lot of times no demand for the fill there. So you don't get them filled. It'll even say, like, Schwab will say, oh, you could sell this for $39, this put. And then you try to sell it for $39, it won't get filled all day. So then you're like, okay, well, I'll take 20 for it. It won't get filled, even though it says it's 39 or 39. So then you end up clicking market, and sometimes it won't even go with market. So there's like no market for the option. So anyway, I'm saying that to warn you, if you're trading these stocks, when you're closing out a spread, you may be able to buy back the call or put you sold, but selling that other option on is sometimes not possible. Okay, Palantir. So this is a newer one that we're trading, and I have this really awesome call credit spread. This was awesome. I loved this play. So again, just doing a credit spread that's on a pop a day, that was a pop, and $1,100 minus 433. So like, I don't know, $600 and premium coming in there. I did some rollouts here because the stock price is rising, and I kind of was like, you know what, rolling this out is fairly profitable right now. I was able to take in $979, and then I had to buy back the other contracts for $515. So there's, $518. So there's like $400 profit there. I sold some shares. Okay. So I had 36 shares that were an odd lot. And I had a profit on them. And it was like a good amount of profit because I bought these shares at like 138 or something like that. And then I sold them for 143. So I like that little play there. And then just selling more calls, doing more put credit spreads, closing some things out. These were expiring, which is great. And that kind of like sums up what we did for Palantir. Okay. And then Walmart. Really, we're just rolling calls here. That's it. Nothing too sexy, nothing too exciting. There's a member of my group the other day that said, hey, Erica, I'm getting the sense that good trading is boring trading. I'm like, yep. It is. If you find clicking a couple of buttons a couple minutes a day to be boring to make a shit ton of cash, yes, it's boring. But yeah, it's kind of boring. And it would be boring if it weren't so exciting because you're making lots of money. Okay, I also sold away some of those shares at 97 because the stock was over $97, so I got a sign. But that was all part of the plan. I'm so happy that happened. Okay, the only other stock I think we're trading in this portfolio is Costco. We only have one leap open, so I'm not even going to go into that. So the next thing that we're going to do is go over to how much premium I've gotten this in this last 15 days. And guys, if you're looking at this and you're like, this is a lot going on, I don't understand what's going on here. I can see that it works, but I don't know what she's doing. I teach a course on this. You guys can do this for yourselves. It is a learning process. It's going to take you about 3 months to start from scratch and knowing nothing to getting to the point where you understand the trades. Okay. If you go kind of like at a nice pace, you will be with me a year for when you're learning this stuff. You will be with me for a year, and you have the option to stay on for more time. And I hope you do, because I really do think it takes 2 to 3 years to get exceptionally good at this. And I want everybody to be exceptionally good at it. But yeah, it's completely changed my life. I love trading. Most of the people that I work with, they already know they're going to love it, but end up falling in love with it even more after this. And if you are already a trader with some experience, but you're not kind of getting the results that you want to get, there's a lot of things that I can do to just sort of give you some tips and tricks to steer you in the right course. So the people that tend to take the course are people that really don't know anything and are coming in because they know this works. They just don't know how to do it. And then people that are sort of saying, I know a lot, there's just some things that I know my returns could be better, and I don't know where I'm sort of messing up, or I know where I'm messing up and I need help with that to understand how to navigate around that. So, I have both of those two people in my group, and I love working with both of them. Okay, so we have a list here of all of the incoming and outgoing cash as far as premium goes here. So if we want to take a look at that, let's dive right in. So ASTS, On that stock, I was able to trade and make $3,359 in 2 weeks, which is pretty awesome. 16 days. So this was from July 1st to July 16th. Okay. Walmart was 682. Ionic was 620. Apple is 687. Palantir was 1306. Interestingly, we didn't really do any Amazon trades. If I noticed that when I come in here, there's really not a whole lot going on. But this is our total. So $6,654 in 2 weeks. That I think is really awesome. I think I'll easily be able to double this by the end of the month and have a 12K month, which makes me amazingly happy and is kind of like the types of months I have when months are pretty good. So there are months that aren't as good, but this is what a pretty good month looks like. I can have even better months than this though, for sure. So this is sort of like mid-high month is how I would categorize it. I will also say we are in July. So July is a very bullish time period and I would expect this month to be pretty good. What you're going to end up seeing happening is that August is not going to be as good. And I know that going into it, okay? So the trading style that I'm going to do is going to change significantly in August. I'll still be using the same sort of techniques, but I'll be using them in a different way. And I don't expect August to be as high earning as this. I also expect the portfolio value to go down. I wouldn't even surprise me if it goes down to something like 260 and it goes down like 15K. Wouldn't surprise me at all. That is just normal seasonal patterns that happen in August. So stand by. I'm going to come into your inbox in the middle of August with another video about how this account is doing then.